Good morning, good afternoon, and good evening to all in one and one in all. This is the Smoking Barrel. I'm Rustin Edwards, based in cloudy, rainy Geneva, with my illustrious co-host, Mr. Matt Stanley, based in beautiful, tropical Dubai. How
Yes.
about it?
Yeah, look, sunny here. Sunny and I'd say clear. It's the desert, so it's mildly dusty. Let's call it that. And talking about being dusty, uh, we didn't record last week. I'm blaming you, but the dust hadn't quite settled over APPEC. Let's put it that way.
It's a lot of travel. I mean, it's a lot of information to bring in and to coalesce into one point of view. I mean, here we are a week after OPEC. We got crude oil up at 74.80, up 31 cents on the day, up pretty much on the week. Fairly good moves, stronger move up. But a
Yeah.
lot of this is based on you got a bit of geopolitical coupled in with some financial stimulus that people are hoping for.
Yeah. Look, I mean, yeah, quite the week. I mean, it was only on the 12th of, no, 10th of September when Brent was seemed to be on a the floor had fallen out of the market. We traded down to $68 a barrel on Brent. It was a bit overdone. I mean, I want to use a different term, but and then obviously we saw OPEC come out and defer the cuts. They didn't have a choice, or defer the return of production come October. They've deferred that by 2 months. And then we've had obviously the Fed come out and surprise the upside on a 50 basis points cut last week. But look,
Well, I
even
mean,
those
I don't know if the Fed was a surprise. I mean, there were a lot of people calling for the 50 basis point cut, and the
yeah.
odds of that cut had increased over the last month from 10% to 80% going into the FMOC meeting. So it's a bit of, was that too much of a surprise? I mean, I think everybody knew 25 basis points was what the major expectation was. 50 basis points was there. But nevertheless, the markets have taken it and ran with it, saying, "Oh, that's some more stimulus coming in. Hopefully, that will spur on the economy and increase petroleum demand."
Yeah, but on oil just went, meh, yeah, there can't be but so, and like move on. Like I think it was one of those things, and we've touched on it all year, that the market was waiting for that, the pivot point for the Fed to start cutting rates again and go on to the next monetary cycle, whatever that will be. It seems like a post-election in November, there will be another rate cut in December, possibly, if data still continues to go the way that Powell wants it to go. Trump obviously said, well, it was a political measure. A man who has lost his grip on all things. It seems like, yeah, I mean, look, we're going to cover that in the coming weeks, I'm sure. But oil markets didn't, if we stick within the optics of what it meant for the energy market, there wasn't really a reaction on Wednesday night. A mild pop, but nothing, fairly steady. And arguably, is that what the Fed wanted? Is that what the sort of wider macro environment wanted? Was a lot of it had been priced in, steady Eddie, see how she goes, and there was no sort of short-term massive spike in volatility. All right, the dollar's weaker, but this morning it's strengthening quite a bit versus the pound, for example. That's probably to do with some data that's just coming out of the UK. I'll have a look. But look, OPEC and Fed not really able to stimulate a rally, I think is a big reflection on how oil markets are positioned right now.
Well, I mean, the net shorts in the market, I think, was a pretty big article that was out last week from the CFTC, regarding the CFTC data showing that the net shorts have increased from funds,
Yeah,
which is fairly interesting position for funds to take, because typically they're on the bullish side of the coin
yeah.
and trying to buy structure, what have you. Nevertheless, I think the biggest question I see here is, what does OPEC do in December? Because the way it looks to me, I would say these voluntary cuts get rolled all the way into June of next year at this point, because other than that, you're going to have stock builds based on the current demand profile across the board when you're looking at
Well,
crude.
look, this is the question, isn't it? Because all they're doing is kicking the can down the road, and we know that. But there's bigger things at play behind the group getting together. I think that what they had a buffer of Q4 in order to say, is it too early? Do we test the market, or do we go Q1 is when we're actually going to start bringing production back? Because I think that there are members of the cartel or group, excuse me, who have an agenda and an objective to increase production. The UAE, for example, they have a plan by 2030 to increase production to 5 million barrels a day. Next year, they're allowed to bring back 360,000 barrels a day of production, or to increase it. You know, that government objective to balance the books and for investments and for the new refinery, the upgrades in Ruwais, that has to happen. That's not just something the UAE are going to sort of kick down the road on behalf of OPEC. So I think that there's the decisions that will happen in January, I think will be fraught with a lot more politics for certain members of the group. I don't think it will be just the group getting together as they did a couple of weeks ago and say, okay, let's bring them back in December. I think Q4 was a buffer, and I don't think there's anything further than that.
Well,
I think that.
And the one point on all this is that these cuts are voluntary cuts. They're not mandated cuts by the OPEC quota system. So, you know, the 2.2 million of voluntary reduction, not regulated reduction. And so the question would be if that gets rolled into a regulated reduction by OPEC or not. I think if it became regulated, you know, you'd have the likes of probably Saudi Arabia, UAE would like to see it spread out amongst all the members, not just focusing on the core OPEC 5 who have made the efforts to reduce production, reduce exports. So that's kind of where you're going to have the big political debate. So I don't think they can roll them into. I think they have to push them down the curve even more, because I don't think, you know, they want to see the stock builds that are being projected based on current release of crude oil in the market come to fruition. I mean, you got some people looking at almost 1 million barrels a day of stock builds in Q1.
Yeah, we've got surpluses in Q4 of about 550,000 barrels a day, Q4 and Q1. Structure is reflective of that as well. You know, if you look at where Brent structure is pricing, Feb March is trading at 18 cents. So really, come December, you're trading Feb as M1 on the futures market. And you compare that to how steep a backwardated market we've got now, 76 cents in the front for Novi Deck. The futures market is clearly pricing in that there will be a lot more oil. Granted, it's not contango structure, which is, you know, really when gloves are off and warning signals are everywhere. But it could go that way. If markets continue to get sold off, structure gets sold off, it could certainly go that way. We could be in a, you know, a neg environment when it comes to Brent structure. But look, I mean, the interesting part, and just to hark back as where we've been, you were in the States and I was in Singapore for APPEC, a largely grim, grim's not, because everyone was it wasn't as enthusiastic as it could have been, right? As it was in previous years. People are only making a couple of billion instead of tens of billions, bless them. No, but joking aside, there are some fundamental realities that I think the market is facing itself with. And the big one is OPEC is you know, what they've done in the last sort of 3.5 years since COVID really is manage the market really well. It's come to the point now that that's firmly in the rearview mirror, and the group have to do different things. There's different objectives that members have got. That's one part. And the second part is the demand story. And that is, where's my Chinese drum? Here it is. We've been banging this all year. And listen, that was what, you know, the big takeaway is that we are now in a negligible demand growth environment in China. They're moving to a renewable electric vehicle based economy. We picked it up in it about a month and a half ago, you and I, and then my colleague as well, Elif, you know, that we see gas oil demand plateauing in 2026. Very much market agreement on that. But not just that, it's where does growth come from? Can it keep up with the growth in supply? And the market simply went no and sold off aggressively. Overdone, I agree. But here's the interesting one, mate, is when we started to see like $60 a barrel or that kind of rumor, that was after the OPEC announcement of deferring and bring back a production. There was no minister who really came out. There was a couple of rumors, maybe they can do certain things, blah, blah, blah. I wonder if the group are going back to the pre-COVID question, is when do we discourage other producers, i.e. shale? We think it's about $60 a barrel. The Kepler view, if prices sustain at $60 a barrel in that $60 barrel environment for WTI, you discourage and actually reduce US shale oil production. Is that what OPEC are waiting for? Are we back to that story now?
Well, if OPEC's waiting for that, they need to do something. Then they should have brought back supply and let it happen. But they didn't. They rolled it down the curve. So they might be waiting, biding their time. But yeah, if that's the case, we have to go. Then yeah, they need to bring oil back and they need to sustain a low price environment over a period of time, not just let it hit a number and then say, okay, we're going to change things and go back the other way. Because markets will react far quicker than OPEC expects. I mean, I think the reaction time in markets to headlines has become far more dramatic, which has increased the volatility. But the one thing with China and the China drum is that when you look at China and they're projected what they want to do for GDP growth rate, how do you generate GDP? By increasing goods and services and activity within your economy. So if the petroleum economy has come to an end or it's coming to an end, and they are investing heavily in the EVs and the whole greenification and the green energy, I mean, they're trying to achieve that same growth as they did before when they were building everything and anything from houses to factories to apartment buildings and buying all the raw materials, producing steel to make all these things happen. They're now trying to shift their economy into a more environmentally friendly, inverted commas, economy, and thus maintain their high GDP growth rate by investing heavily into that green technology and reducing their investment in the other angles.
God,
Excuse me.
God bless you.
Well,
A smoking barrel sneeze. Go on.
pardon moi. But nevertheless, I mean, so that is where I see how China's change is going. Is that they're going to have economic growth. It's just not going to be economic growth driven by consumption of raw materials and petroleum as it was 5 years ago or even 3 years ago. I think we're at that point where that inflection has happened, and they're more than happy to keep pushing things into the newer technologies, the green technologies, and export that to the world versus exporting more GI Joes with the kung fu grip.
Yeah, well, I mean, there you go. But I mean, it's funny because there was a Bloomberg article last week where it said China is considering removing some of the largest remaining restriction on home purchases after previous measures failed to revive a moribund housing market. Great word, according to people familiar with the matter. Look, I mean, they're doing everything they can to try and boost demand. It just doesn't seem to have had the profound effects it used to. And I think that has spooked a lot of people.
Well, but it's a saturated economy. I mean, it's I think I said this a couple of years ago. China is not a growing economy. It's kind of hitting into a mature economy. It's
Yeah.
not that story, that narrative has to change, and it has changed. And so they're trying to maintain their political view of having their 5% GDP growth year on year by stimulating other sectors, which can provide that growth because you're going from zero to whatever. When you think about green technology and building solar farms and wind farms and adapting EVs and all the alternative fuels that they're trying to generate in China, I mean, that's all greenfield investment, and all that's going to drive GDP growth. Where the mature economy of construction and real estate and refining is kind of maxed out at this point. You can't just keep running refineries to produce more product and then you just start flooding the world with that product, putting a negative pressure on margins across the globe.
Yeah, let me share my screen because there's something that last week. I mean, we just like boil it down to what's happening in the refined product space just for a minute. I would argue, and I'm tactfully trying not to swear here because we're a family show. People like, comment, subscribe. Thank you. I would say it was poor, bad, or crap. That's kind of how people summarized where refining margins were now. The last one was reserved for gas oil, right? I'm a friend of mine. I'm quoting verbatim from a friend of mine. Thank you, Jed. When he was talking about refining margins. But the best performing part of the barrel this year has been our favorite joy and love, Rustin, is VLSFO, very low sulfur fuel oil.
The dark and dirty products, yes.
Yeah, we like a residual barrel on this show. We're not the shiny green smoking barrel. We're the everything smoking barrel. We smoke everything on here. No, we don't. But anyway, if we could, we would. But VLSFO has been performing very well. Now, if you look at, and I'm sticking within China here, so let me land. If you look at the podium of bunker ports or bunkering ports, Singapore gold medal, number one, about 4.5 million tons a month of of material a month that is distributed within the Singapore waters. Number two, Rotterdam. Correct me if I'm wrong, around 2 million tons a month, Rotterdam?
Roughly, yeah.
Okay, and then we look, number three was between, it's always been between, well, it's always been Fujairah really, about 800 to 1 million tons. Was a lot more before the Qatari boats used to be able to bunker in Fujairah, but that was a while ago now. And Gibraltar was there as well, and Houston, obviously. But now what's come, now number three is firmly Zhoushan, right? China, the big bunkering hub where vessels are positioning themselves as being Zhoushan. Now, what does all this mean? Where am I going to? Okay, the way how infrastructure is shifted in the bunker market, China are very much part of that. What they have done in terms of export quotas, i.e. the majors, so your Sinopec, your PetroChinas, your Sinox, et cetera, in China, how much are they allowed to export? And last week, we saw China issue its third batch of export quotas. Now, you might see this kind of stuff being bandied around. Export quotas are lower in China, but what does it all mean, right? It's one of those kind of data points I think people look at. Yeah, okay, what is it? But it's important for VLSFO, and this is why I'm my colleague Roz. We spoke about it last week, and he wrote a really good piece about it. On when did he do it? This morning. That's how active we are, people. So let me share this screen. You can see that tight China export quotas fuel bullish sentiment in VLSFO markets. You can see that, yeah.
Mm-hmm.
So if we look here, so there's just a couple of things. 2024, here we go, by batch. You can see the third batch of VLSFO is pretty negligible. Now, we saw, Roz goes on to explain, China issued its third batch of VLSFO export quotas totaling just 1 million metric tons. Initially, industry participants estimated 3 million metric tons would be released. Okay, let me ask you this. Riddle me this, Batman. That's you, Edwards. If VLSFO is the best performing part of the barrel right now, and China don't release as much as people think, that pushes up refining margins for VLSFO. Are China in control of VLSFO margins right now?
I'm Batman. So is China in charge of VLSFO margins? It's a very interesting question because basically the demand profile inside of China of the 220 million metric ton market, it is a percentage of the market, but nevertheless, I don't know if I would say that they're reducing the export quota puts them in charge of the VLSFO market. It adds a potential demand increase in the marketplace. And why does that do so? Because an export of VLSFO is not so much them moving out cargoes, but it's the fact that they're actually loading out bunker stems to ships. And so what should end up happening is that once they lose export quotas, there's no more fuel to sell. And so either A, they have to petition the government for more export quota to meet bunker demand, or that bunker demand shifts to other ports, such as South Korea, Japan, or into Singapore. So nevertheless, it would in inverted commas increase demand in other locations where ships on certain routing will have to pick up fuel because there's just going to be more available.
Yeah.
So how much of a marginal increase is that? I mean, does Singapore go from 4.2 million a month to 4.4 million a month? Could be. But the big limiting factor is also going to be what is the response of gas oil to the price of VLSFO? Because
Well, this is it. So yeah, nice little segue there. Thanks for that, because I've got a chart that just highlights that. How it's amazing that we don't script on this podcast, people. Right? That was natural. So if you look here, you can see this, right? You can see the chart
right there, and you add the 0.1 sulfur, which is the max sulfur on marine gas oil sold to the maritime industry. That spread even collapses even further. And 2 weeks ago, there was that inflection point where gas oil in Singapore was cheaper than VLSFO. So the price of your gas oil always provides your ceiling to where the price of VLSFO is going to go.
So yeah, I mean, look, if you look here, so we're going over 2.5 years since January 2022. I mean, and that's sizable. It's picked up a little bit now. I'll stop sharing it, but thanks, Roz, for putting that together. It's a really good piece, and it's really important because people look at, okay, diesel's not doing great, VLSFO is. There's or to any point there is a counterpoint, and as weak as gas oil is, VLSFO is as strong. And arguably, with China not releasing as many quotas, and PetroChina have been the most active in the window recently, public knowledge, that's not insider information, that's complete public knowledge. And you just think, okay, is that to me is quite a fundamental shift in that the Chinese have always been involved and have always been, you know, a big refiner and big, you know, obviously move the needle when it's come to crude buying. I mean, they have been more active recently in the market than they have been for the last couple of years, because prices got down to a point they're not consuming it, but they can store it, because $68 a barrel makes a lot more sense than say $78, $85 a barrel does, obviously. But now we're coming into the cracks and where refining margins go and export quotas and what government initiatives are. Arguably, VLSFO is going to continue to get stronger. And I'm just looking now, I don't know, since the podcast started, Russ, Brent is off 50 cents a barrel. So maybe if we were streaming live, people would blame us for Brent collapsing. That's how important we are. But look, I'm just going back to the China story, just quick. Sorry, it is to me extremely important to acknowledge the role that China plays, not just we are a buyer of oil, but we are a producer, and we can move the needle on global margins if we want to.
Well, China has always been a swing producer in that case because of the exports of gas oil that come out of China. When the demand inside of China is not so hot, they export a lot of gas oil. You see it with ships that are loading out of dry dock. A lot of VLCCs or Suezmaxes get cleaned up to load gas oil cargoes out of China and ship those to Europe. So that's always been there. But I think the story on the VLSFO is there's a bigger contextual picture there than just what China's export quota is. Because China's export quota just adds, I'm going to say, more fuel to the fire. Please excuse that pun.
No, I like
we
it.
are the smoking barrel, and you do need heat to create smoke. But nevertheless, and where there's smoke, there is actual fire here. When you look at it from a global standpoint of what's going on with VLSFO, you do see a general tightness going into Q4, and that's a lot of it has to do with the marginal production barrels not being available in the marketplace that you normally think. South Sudan, DAR blend, which is a primary blend component of crude into 0.5 fuel, has been offline and probably will remain offline for the time being until you have more stability in the civil war there, as well as repairs to the pipeline, because dark
Yep.
crude, being a high pour point material, has probably solidified and made those pipelines large candles. You've got the Al Zor until today has not really been exporting any 0.5 to the market on top of what they normally supply to their term contracts. Dangote's refinery, as they've continued to ramp up their own internal units, they continue to produce, or they've actually been cutting back on how much VLS low sulfur straight run they've been exporting, which has been causing, again, another piece of tightness, because that was up to 400,000 tons a month.
No,
I think the only bright spot.
Yeah, sorry, Mo. Just on that, just picking up just before you carry on the DAR blend, you can see here we have seen 0 DAR blend come out of Sudan since April. And you compare that to where we were a year ago. Where are we now? September, 300,000 tons. 3-month average was around, where are we? Around 300,000 tons. Now, okay, there was a spike here, 500,000 tons. But you can see, 2/3 of that was going into the UAE. And without that,
which is
exactly
basically being topped by the topping units in Fujairah to make 0.5 fuel. That was the primary supply source of 0.5 blend stock.
Yeah, exactly. So it's just sorry to cut you off there, but it is a bullish story. Everything VLSFO, from feedstocks to demand to export quotas to Al Zor going down, etc.
There's the bullishness that's probably region east of Suez, and then when you start getting into the Atlantic Basin, you get a bit more weakness into the picture, because you've got a very poor gasoline demand market, which is basically should incentivize refineries to reduce run rates or cut back on secondary processing, which should release more material into the 0.5 blend pool. So you do kind of, I think, have this balancing act where you see Asia remains relatively supportive and strong. Atlantic Basin should get weaker just because of those
Yeah.
macroeconomic conditions that are impacting refinery runs on both sides of the Suez split.
Yeah. Yeah, I don't know what. Sorry, just last screen I'm going to share. I'm all about a share screening today. Hang on.
You're
I
like the
just want
guinea
to.
tree.
Well, I've got to do something. Um, it's. I don't know what's happened. I don't know what's happened, but it's some sharp selling in the Brentford, well, across TI as well. Gas all coming off as well. But look, I think, just back to sort of fragility of markets here. Obviously, cable up here as well. Obviously, that's off 0.5%. There must have been some news out of the UK or something. I don't know.
Well,
We'll have a
my
look.
guess is again there was supposed to be a press release from the Chinese central bank.
Right.
Um, so maybe they've said something that people were expecting more stimulation, and they've said nope, not going to do it.
Yeah, maybe. I mean,
So
look,
like the
I think
shorts, I
that
don't see a headline.
yeah, look, just moving on from what we were talking about, VLSFO. I know, sorry, we're fuel oil people. But we've managed to get in about 25 minutes of the podcast without talking about the Fed.
Well, no,
Apparently they cut.
we did talk about the Fed at the beginning, at the opening.
Did we? Oh, I forgot
Yes,
it.
we did.
Oh yeah, well done, Powell. Oh yeah, we did. Yeah, sorry, I bored myself with that. No, I'm joking. It's it's amazing, isn't it? Because I'm going to swear. There's so much shit going on right now, right? I was reading an article this morning in The Economist, and I do read The Economist, all right? Don't think I just read the Daily Sport people, all right? I'm an economist. Military sources say that Israel is also planning a ground offensive in Lebanon that would include the capture of a buffer zone consisting of a few miles of territory north of the border. The plans for a ground invasion are ready, said one reserve officer, but we're still a way off from having the sufficient forces here to carry them out. I would say, and it's been going on over a year, well, nearly a year now. I think October is when it started officially, 2023. But the narrative is becoming a lot more serious. I mean, I don't want to trivialize what we saw last week in terms of the electric devices that were triggered remotely and something that Ethan Hawke put together. It was mad. It was mad, and I feel like the media don't really know how to opine on what it all means. Remote devices targeting Hezbollah representatives on walkie-talkies or mobile phones or whatever it was. I think it's just, for some people, is beyond beyond their pay grade, if you like, right? For want of a better term. It's such a shift, and the aggression behind it all is just seemingly unending. What does it mean, though, right? And what does it all mean for okay, translate that, Stan. Shut up about Ethan Hawke and Mission Impossible. What does it mean in oil markets? It doesn't, right? And I hate to dismiss it, but with my oil market hat on, I've got flip flops. Can I wear my oil market flip flops? It's fine. It's been priced in. I would say that all these stories that are coming out of missile strikes or rocket launchers, whatever it might be, the oil market doesn't react. It's largely been priced in, and what may have to happen next in order to cause a spike because of geopolitical uncertainty doesn't bear thinking about. But would you agree that it's all kind of been priced in?
Well, I think it has been priced in because at the end of it all, I mean, it's not impacting any real oil producing region, and you really haven't had any member of OPEC say that they wanted to curtail supply. I mean, even the biggest supporter of Hezbollah and Hamas is still continuing to export oil to the market. So without having that impact of being able to put an embargo in place like was done in the past,
Yeah,
there is no impact to oil supply. So until there's actual real curtailment of supply, there's no reaction from the marketplace. I mean, I think everybody expected some type of impact or some type of thing to happen, but it never materialized. I don't think it will materialize. So I think at the end, I mean, it is what it is, and it's there.
yeah,
It's unfortunate that this hostility continues to brew in that area, in that region of the world. Hopefully, at some point, peace will find a way. But nevertheless, until so, it'll just be a complete humanitarian disaster, and we have to wait and see what happens. But I don't think there's any impact on oil, and I think that's part of the reason why you see a lot of the air being let out of the oil markets, coming back to a more realistic price point and more realistic price structure, because there is no impact.
Yeah, I think that's I think that's a totally fair summary, mate. And this is why you're good cop, bad cop, right? Because you can say a lot more poetically than I can. But it is what it is. I think that's a fair summary. I think the oil market is like it's unfortunately the status quo in that part of the world now. Look, I mean, moving on without dismissing it as humanitarian, we hope everyone's all right. There's nothing more we can say to that, right? But moving on, I mean, geopolitics aside, Russia, Ukraine is still very much an issue. Gaza, Israel, Hezbollah, etc., still very much an issue. All eyes now focus on US elections, right? I mean, before we wrap up this week, that's really going to be the focus over the next sort of 6, 7 weeks, isn't it?
Oh, I think so. Well, I mean, I think that's going to be the narrative going forward. A lot of polls have Kamala Harris in the lead, Donald Trump losing his grip on any type of support. But again, polls have always been shown to be misleading.
Yeah.
I think the election personally is still going to come down to probably 6 or 7 states where will determine who is going to be the victor. Because remember, the United States does not use the popular vote as a gauge of an election; it uses the Electoral College, which is a measure of representation of the states in the Congress of the United States.
Yeah.
And so you can do the math, you can look at the tables, you can say, yep, these are the 6 or 7 states that are going to determine the election. They're all mid upper Midwest states for the most part, and that's where you're going to see most of the battleground happen going forward for the election, for the hearts and minds of the people of the U.S. But nevertheless, I don't think it's particularly bullish on either side of the coin for whoever gets in, because of the policies they want to dictate may not be supportive.
And I agree with whatever that man said. Look, I'm very conscious about running overtime because I watched Man City Arsenal last night, and that ran overtime, and that's when they equalised. So I don't want to talk about it. All right. But no, look, good to see you. Like I said, a lot of politics is where I think the optics will shift to. $74.30. We started 74.80. So we've got anyone who sold the market, we owe us 50 cents worth of whatever position you put on. All right.
That is true. So look to catch us next week as we do another podcast again, and try to keep a bit more rateable going forward. November 11th, you can catch the Smoking Barrel live in Dubai.
Yes, Bari week,
So
live and direct at you.
yes, so please look us up, and we'll have more details of that as we get closer to that time.
Yes.
So good trading, and have a good productive day.
Ciao.